So despite the support the government has put into place, redundancy will be affecting more and more individuals as companies look to survive. In this video, I'll provide you with an insight into what you should know in relation to a redundancy payment and cover off the following areas: what might be included in the redundancy package, how this might be taxed, the impact of this payment on your personal allowance, your child benefit, and your pension annual allowance. I'll also look at how you might be able to mitigate some of these areas by using a pension contribution. So for those of you that don't know me, my name's Ed Bailey and I'm a chartered financial planner with over 10 years experience in financial services. Get yourself a tea or a coffee and let's get into this. As with all of these areas, this is for information, education purposes only, and your own situation will be specific to you as to how you use any redundancy payment. In most cases, the aim should be to ensure that you can meet your immediate outgoings and pay down debt where possible. If you are unsure in any way, then you should seek financial advice. So what might be included in the redundancy package? So on termination, the payment might include the following elements: statutory or enhanced redundancy pay for loss of office. This is what most people understand as redundancy pay, where you receive the first £30,000 tax-free. It's interesting to note here that the government has confirmed that statutory redundancy should be based on an employee's normal wages and not their furloughed pay. So after 2 years with your employer, you'll qualify for a minimum statutory redundancy payment. If you've worked there for less than 2 years, you've no right to any kind of compensation. For those who have at least 24 months continuous service, your entitlement will depend on how long you worked for the company and how old you were during this time. For each full year you were under 22, you'll receive half a week's pay. For each full year you were aged between 22 and 40, you'll receive a week's pay. For each full year you were aged 41 or over, you'll receive a week and a half's pay. So if you're aged 45 and you've been working for an employer for 10 years, you should be entitled to 6 years at a week's pay and 4 years at a week and a half's pay, making a total of 12 weeks pay. Now, before you start adding it up, it's based on a maximum salary of £27,976 per year. A week's pay can legally be capped at £538. So even if you earn more, you aren't entitled to it under the statutory payment. And the limit is currently £538 a week if you were made redundant on or after the 6th of April 2020. And this has gradually increased from its level of £350 in 2009. Length of service is also capped at 20 years, so any extra years don't count towards it. And the maximum amount of statutory redundancy pay you can get is £16,140. If you were made redundant before the 6th of April 2020, you'll get lower amounts. It isn't the age you are now that counts, but the age during each year you've been in your job. So other pay received for duties performed before leaving include salary, bonus, commission, and holiday pay. An employer pension contribution. This may include contractual pension contributions, which the employer is obliged to make for the balance of any notice period. Payment in lieu of notice is paid where you leave before you've worked the full notice period under your contract of employment and are entitled to be paid for the period between leaving and the end of the notice period. Payments in respect of restricted covenant. This is really where someone receives a payment for not doing something after leaving. For example, an employee agrees not to take clients from their ex-employer or work for a competitor. So this includes garden leave, where an employee agrees not to work at all for the leave period. So how is it actually taxed? Your employer should deal with the tax due on the termination payment through the PAYE system, but it's still important that you understand how you've been taxed and the wider impact this has on your tax-related allowances and benefits. The following is a general overview. Statutory and enhanced redundancy payments are free of tax and NI for the first £30,000 and has no effect on the tax rates paid on other income. The excess above £30,000 is fully taxable, but employees pay no national insurance on this. However, since the start of this tax year, employer NI and 13.8% is payable on this excess amount, potentially increasing the attractiveness of a sacrifice arrangement to a pension, as I'll explain later. Redundancy payments are treated as received when the employee becomes entitled to the payment, and it's not therefore possible to spread the payment over 2 or more tax years. Salary, holiday pay, and payment in lieu of notice payments are generally fully taxable, and no part is tax-free. Employer pension contributions are not taxable in the hands of the employee, and they're not subject to employer or employee NI either. Restricted covenants are normally taxed in the same way as pay, but professional advice should be sought on this area. Receiving a large lump sum in one tax year can push you into higher tax bands and result in lost allowances and benefits, increasing the effective rate of tax for that year. This includes higher tax rates. Whilst the first £30,000 of the redundancy payment is tax-free, the taxable elements can frequently fall into higher tax brackets, especially if redundancy occurs late in the tax year when a large proportion of the annual salary has already been received. In addition, the order of taxation means that the redundancy package can push savings income, dividends, and capital gains into higher rates, because these all sit on top of earned income. The personal savings allowance might also be reduced from £1,000 to £500 or lost altogether if total income exceeds £150,000. Personal allowance can also be reduced when someone receives a redundancy package, and this works that every £2 of adjusted net income over the income limit of £100,000, £1 of personal allowance will be lost. That means that in the current tax year, personal allowance is wiped out when adjusted net income exceeds £125,000. If this happens, you may have further tax to pay at the end of the year, as the amount deducted via PAYE is unlikely to account for the lost personal allowance. This generally gets picked up when completing your self-assessment or you start a new job. For those currently receiving child benefit, the impact of the payment could mean it's lost altogether. So child benefit is reduced if adjusted net income exceeds £50,000 and is totally lost if it exceeds £60,000. The amount of child benefit is dependent on the size of the family. For example, a family of 3 children could lose around £2,500 a year. The pension annual allowance, the standard annual allowance is £40,000, but can be tapered down to a minimum of £4,000 if you are a higher earner. Individuals previously unaffected could be caught due to the size of their redundancy package. For this tax year, if someone's threshold income is more than £200,000 and their adjusted income is more than £240,000, their annual allowance will be reduced. The reduction is £1 for every £2 of adjusted income over £240,000. Now, it might seem counterintuitive to make a pension contribution at a time when easy access to cash is a priority, but this could deliver a better financial outcome if there are other assets that could be used to cover current income needs. So the tax relief on pension contributions make them the most tax effective way of saving for retirement. So a £20,000 addition to pension savings comes at a net cost of £12,000 for a higher rate taxpayer. This might be even more if extra savings can be made where the personal allowance is restored, or child benefit can continue from making a pension contribution. And potentially much more can be paid into a pension in a single tax year than the next best home, an ISA, particularly in the year of receipt of a redundancy package. Reducing tax rates and reinstating allowances, making a pension contribution, whether as a personal contribution or an employer contribution through salary sacrifice, will reduce tax rates based on total income, perhaps from 45 to 40 or from 40 to 20%. It also reduces your adjusted net income, perhaps reinstating the personal allowance, which on its own is worth £5,000 to a higher rate taxpayer. The same is true for child benefit. If adjusted net income can be reduced to £50,000, this could wipe out the child benefit tax charge, which could be worth an extra £2,500 for a family with 3 children. Now, some employers may offer or agree to a sacrifice on some or all of the redundancy payment. The advantages, of course, is that the employer pension contributions are not normally subject to NI at 13.8%, and they may be willing to pass this saving on to the employee. Therefore, it makes sense to make the sacrifice from those parts of the redundancy payment that are subject to NI in the first instance. For example, the optimum order may be pay in lieu of notice payments, because these are subject to both employer and employee national insurance, then the taxable part of the redundancy payment for loss of office, because employer NI is due on these. While the £30,000 tax-free element could be sacrificed, there are no tax or NI advantages in doing so. It may be better to pay it as a personal contribution. In particular, high earners choosing the redundancy sacrifice option can sometimes cause the annual allowance to be tapered, restricting the amount that can be paid into the pension without incurring a pension's annual allowance tax charge. This is in contrast to an individual contribution. While clients may benefit from NI savings made under a sacrifice arrangement, not all employers may be willing to offer this option. A personal contribution still makes sense and may even be preferable if your annual allowance would otherwise be tapered. There are several things to consider when making an individual payment into a pension. There will be no NI savings to be made, unlike a sacrifice. You must have enough relevant UK earnings to get full tax relief. In fact, most providers will not accept contributions in excess of earnings. Relevant UK earnings are broadly any pay taxable in the UK, including benefits in kind. The taxable part of the redundancy package will obviously boost earnings and the potential for a large pension contribution. The £30,000 tax-free part of the termination payment, plus dividends, rent and other savings income, are the main items excluded from relevant UK earnings. If you don't have sufficient relevant earnings or annual allowance, you could think about making a contribution to a spouse or partner's pension, provided they themselves have the scope to do so. Also, earnings from abroad. Earnings not taxable in the UK due to a double taxation agreement will not be included in relevant UK earnings. You also must have enough annual allowance available, otherwise the tax relief given on any excess will be clawed back through self-assessment. Unused allowances from the last 3 tax years can be added to the annual allowance for the current year, but obviously receiving a taxable lump sum on redundancy can mean that the adjusted income limit of £240,000 is breached, resulting in a reduced annual allowance for the current year. To remedy this, an individual contribution may be enough to reduce the threshold to below £200,000, restoring the full £40,000 annual allowance. As mentioned, this is not possible if the pension contribution is made by sacrifice. So the prospect of redundancy can be a very, very difficult time, but equally for some it can be a welcome cash injection that could mean retirement plans can be brought forward, or that savings can be boosted if you can quickly find suitable new employment. With the right tax planning, those retirement and savings ambitions could be further enhanced. Please see my videos here and here in regards to state pension and personal pensions. Thanks so much for listening, and if you enjoyed my content, then please do hit the like button and the subscribe button.